Bitcoin, BTC, continues to trade under significant pressure, slipping below the $110,000 mark and sparking renewed debate among analysts about its short and long-term trajectory. While macroeconomic conditions in traditional markets such as gold and equities remain favorable, Bitcoin has struggled to sustain momentum, raising questions about investor confidence, institutional participation, and the broader direction of the crypto market. Current price and market movement. Over the past week, Bitcoin has endured its sharpest decline since March, falling roughly 5% after encountering resistance around $110,000. Despite previous attempts to reclaim higher levels, the asset remains subdued, weighed down by profit-taking from long-term holders and slowing capital inflows into Bitcoin ETFs. Analysts are split on the near-term outlook. Some caution that BTC could temporarily dip toward the $60,000 zone, while others highlight potential for a sharp rebound, with forecasts ranging as high as $200,000 under certain Federal Reserve policy scenarios, as noted by Mike Novogratz. Investor sentiment and trading insights. The broader mood in the market has shifted toward caution. The Crypto Fear and Greed Index recently dropped below 3,100, a signal of growing fear and risk aversion among participants. Retail and institutional. Traders alike remain on edge, with some seeing opportunity to buy the dip, while others adopt a wait-and-see approach. Whale movements and institutional trades continue to shape intraday volatility, though Bitcoin has notably underperformed against rivals such as Ether in recent quarters, reflecting shifting investor preference toward altcoin ecosystems, adoption, and regulatory developments. Despite short-term turbulence, Bitcoin's adoption story remains intact. ETFs tracking BTC are now widely accessible on U.S. exchanges, with several leading financial institutions recommending strategic portfolio allocations. On the global front, countries like El Salvador continue to recognize Bitcoin as legal tender, setting a precedent for national-level integration. At the same time, user participation is growing across decentralized exchanges, DEXs, alongside established centralized platforms, CEXs, reflecting a diversified ecosystem of engagement. Regulatory oversight, however, remains a decisive factor, as governments worldwide intensify scrutiny of crypto activities, shaping institutional strategies and retail access alike. Key considerations for investors. Resistance zones. Bitcoin faces heavy selling pressure above $110,000, suggesting that this level will remain a critical resistance point in the near term. Long-term resilience. Historically, Bitcoin has endured multiple cycles of sharp corrections followed by strong recoveries, but external influences such as monetary policy and global liquidity conditions continue to impact its trajectory. Historical context. As the first cryptocurrency with a capped supply of 21 million coins, Bitcoin maintains its reputation as digital gold. Long-term valuations remain highly speculative, with some discussions extending to the possibility of BTC reaching 1 million per coin, a scenario that would redefine global financial systems. Conclusion. Bitcoin's path forward is likely to remain turbulent as macroeconomic forces, regulatory landscapes, and investor sentiment intersect. While short-term volatility is creating uncertainty, institutional adoption, and the growing integration of BTC into global markets continue to support its long-term case as both a speculative asset and a potential store of value. Investors tracking BTC's price action should remain mindful of resistance zones, ETF activity, and evolving global regulations, all of which will play key roles in shaping the next phase of Bitcoin's market journey. For continuous updates, analysis, and breaking news on Bitcoin, readers can follow platforms such as Cointelegraph, NewsNow, and Bitcoin.com, which provide live coverage of price action, adoption trends, and regulatory shifts.